This is the Investing Bros. Thank you so much for joining us this morning, where at least for now, we go live every single morning from 9 to 10 a.m. Eastern Standard Time. More on that in just a little bit, but we got a lot to unpack today. It is a full schedule of news, a lot happening here. First of all, Silvergate officially closing its doors, and of course, the market responded bearish to that, hitting some of our projections, touching down towards that 21,500 on Bitcoin and some other coins. We're going to talk about that in the TA section. What does that mean for crypto, though? Because, of course, this is kind of now a wedge between the crypto space and traditional banking. How will that affect your crypto in the future? The biggest news possibly of the day, and like I said, there's a lot we're going to be covering in the second half hour of the show, but President Biden, he wants your gains. He thinks that you make too much money. And so now, potentially, he might try to double your capital gains from around 20% to about 40. It's about 39 point. I can't remember what the exact number is. But let me know in chat what your thoughts are about that. I put over this morning on Twitter, there must have been a conversation in the White House this week where they were just discussing in depth, man, people in the United States, they're struggling to pay their bills. They're not making enough money. You know what we could do to help them out? We could just take more of it from them, and then they'll feel happy about the whole thing. That sounds like a great plan. That's American politics for you. We got a lot to unpack on this show, like I said. I'm excited. If you're excited, go ahead and smash that like button. If you're new here, subscribe for more content. We go live daily covering Bitcoin and crypto and stocks. We cover the TA. We cover the news. Everything you need to know to make sure you're investing wisely for yourself. I am joined this morning by Army Piper from Texas. How are you doing this morning, Piper?
Brother, I am not doing as good as T-Shroom.
Amen. I don't think any of us are, For those who don't know, T-Shroom, the reason he's not on here this morning, he is on his week-long cruise. Although he is cruising for a bruising, Piper, because today is Thursday. He's got today and one more day. But actually, no, I think today's last take is Friday. He gets back tomorrow. He drives back up to Gainesville. He's going to spend one night in his bed and then wake up at like 4 a.m. to head to drill this weekend. So he is living the life right now, but here in the next 48 hours, it'll go from a luxury to some pain. And then he'll be back with us on Monday. Cannot wait to start this three-headed monsters that is the Investing Bros. I do have a question for everybody. And we're going to have a quote of the day today. We're going to read some of the names in chat. But I put there in a poll this morning, and I want everyone to go vote on this. What showtime would you guys prefer for Investing Bros? The original slot we have right now, 9 to 10 a.m. Eastern Standard Time, 9:30 to 10:30. So should we move the whole thing back a half hour? I know a lot of our friends out in California more than likely will love this. Or should we even start expanding to an hour and a half and still start at 9 a.m., but run all the way to 10:30? Make sure you guys are casting your votes for that. Just so you know, nothing will change anytime soon. If we do end up changing the slot of the show, we will give you guys more than enough time in advance to be aware of that. Ultimately, though, this week we're changing. We're continuing to grow and do new things. Look for more content, newer content coming out. Also, I want to give a special shout out to Chart Prime. They're one of the special partners of our channel. I'm so excited about what we're doing with them. Look for more content we're going to be producing even on their YouTube channel and over in their Discord. A phenomenal indicator. You're going to see us use it every single day to break down the TA for you guys. And there's a really exciting thing about Chart Prime today. And that is there's been a decision in the company to temporarily, short time, they're going to get rid of the lifetime offer that Chart Prime has. But for the next couple of days, all the way until March 20th, you have the opportunity to go purchase it for 50% off, which is a fantastic deal. Make sure you check out that link down below if you are loving Chart Prime. That deal will not last very long. Make sure you act on it today. With that said, Piper, do you want me to read the quote of the day, or do you want to take us into this quote, this beautiful quote this morning?
Well, I didn't pull it up, and you have it up. I'm going to let you run with that, Tim.
All right, so go ahead and go to my screen. This is from Albert Camus. Anyway, the quote of the day is, "In the depth of winter, I finally learned that there was in me an invincible summer." Piper, what are your thoughts about that quote?
Bro, so that inspires in me about DCA personally. I think, in the depth of winter, the crypto winter, I learned that within me there was bull run summer gains. There it is. That's how I take that entire quote.
Boom.
Beautiful.
Hey, I need to go check. I got a second ring on my doorbell. Piper, why don't you go ahead and read some names in chat, and I'll be right back.
I got you, Tim. I got you. So yeah, we're operating on the fly today, but we are going to go take a look at what we have here in the chat today. First in the chat this morning was a mellow fellow. He said, good morning, bros, and all good people watching. So thank you for that. We got a mellow fellow in here. We also got Mike Play saying good morning, bros. Eric Wallen saying hello. We also got Justin Eubanks giving a shout out to him. Good morning at Investing Bros. Appreciate you being here. Ninja Glock in the house today with a longer shows, bro, or 2 live shows. Good question. Crypto Sec Guy said he was first, but he was not. He was here in spirit and soul. So, that's a great thing to see. Crux of Crypto, awesome help that he's been given to the show every day. Saying good morning, bros. Gia S saying, I bet. Who else we got in here? We got B.O.B. in here. Crypto JMP dropping in. I'm here. Shannon Sharp with the Blue Wrench. Always great to see her in here. CBD Suddy dropping the good morning, my people. Good morning to you, CBD Suddy. Who else we got? Did I miss anybody? I don't think. Oh, Cryptex. I cannot forget Cryptex. We love Josh. Good morning to everyone dropping it in there. And then Mike Play says, give him an ice cream cone and sit him in a corner. And Yair Navarro saying good morning. Papa Shrum in the house. Thirsty Thursday right there. Thursday, finally. And then Kid Combe, I'm going to wrap it out with him he's like 20th. It's okay, man. At least you are here and we appreciate you being here. Tim, take it away.
I'm going to give you guys one guess as to what was ringing on or who was ringing on my doorbell and why they were ringing on my doorbell. Piper, what would you guess? What would you guess is the reason why I have someone coming at my house this morning?
I'm going to guess it was someone telling you that your auto insurance has your warranty has elapsed and they would like to talk to you about that. Or it was solar panel cells.
Well, that was two guesses there, Piper, so you broke the rules. No,
sorry.
It was freaking Beamer escaped again. The man's got a skill. He knew that the market was going down. He made a run for it. So my neighbor returned. I don't even know. I thought he was inside the house. My wife, before leaving for work, must have let him outside. And he did it once again. Beamer just cannot help himself for being featured on the show one way or another. Yeah, that is who was ringing on my doorbell. Very nice neighbor. It's funny. Every single time my neighbors return Beamer, which is becoming a thing, him escaping, I always get the same compliment. Oh, he's so sweet. He's so amazing. But he's in my yard. Like, I don't know how he got there. And I'm like, I have no idea either. So I'm going to have to handle him after the show.
My
little bit of, yeah, go ahead.
My guess should have been that it was Biden asking for your crypto gains.
Possibly. And maybe that's why Beamer escaped this morning and he is trying to deal with that whole situation, but the neighbors intercepted him. Before we get going here, Piper, and we're going to get into the TA and then we'll do the news in the back half, I want to kind of open up to you. And what can we be expecting right now? What is the looks right now of the macroeconomic situation before we jump into some of this TA?
All right, Tim. So what we got today, we had the initial jobless claims that came in here this morning. It was previously at 190,000 initial jobless claims. And what this is people that filed for unemployment, right? So consensus was that it was going to be at 195,000. Forecasted to be at 192,000. We actually came in at 211,000. So we are seeing an uptick here, small uptick in initial jobless claims for this week. But we do have FedBar speaking today. Not sure what he's going to say. Not sure how it's going to impact the market. But tomorrow we get unemployment rate and we get the non-farm payroll. So this is all average pay in the country for all jobs that are not farm payroll. And the reason they do that is because farm payroll is seasonal and it can create inaccurate averages throughout the year. So that's what we're looking at for tomorrow. Unemployment rate is currently at 3.4%. If you guys remember earlier in the week, we had the whole thing with, I guess it was yesterday, we were talking about Elizabeth Warren and Jerome Powell's back and forth about the amount of 1% unemployment coming, increase coming. So it looks like right now the consensus and forecast are going to be 3.4% also, and not going to give any change yet. So that's good to see. If this comes in tomorrow, though, and this unemployment rate is higher than 3.4%, we could see that dump in the market because, it's a self-fulfilling prophecy, right, of what everyone's been talking about. And then let's jump over to the CME FedWatch tool, which, if you guys remember earlier in the week, we were talking about this. This over here was at like 70%, and this was down at like 30%, 29 point something. And I said, Jerome Powell's getting ready to speak in like 3 minutes. If we see this flip, we're going to see drop in the market. Well, look there. We're at 82.3% chance now of 50 basis points. But remember, we do have that Cleveland Fed projection that was saying that the numbers could be lower for the inflation rate on CPI. And if they are correct about that, we could see that go back and flip the other direction. So
yeah, it's gonna be a very interesting week next week. Like you just mentioned, those numbers could change a lot. But the fact that we have had that teaser, and I kind of mentioned this yesterday a little bit, a lot of people have been mentioning that Cleveland data, and yet the prediction continues to climb that it's going to be 50 basis points. What do they know that we do not know? We're going to have to wait till next week to find more of that out. But go to my screen as we start the TA this morning. We're going to talk more about the news in the second half. However, we did have a dip late last night from the official news that Silvergate was closing down again.
You're very zoomed in.
Yes, I've been zoomed in on purpose because I wanted to show them this morning, though, we are recovering. Yeah, so that was not a mistake. This is usually what T-Shum does. So we are recovering. Gala, for example, up over 5% this morning. But as a whole, only Atom of this look that I'm going at, only Atom is in the red this morning. The other red right there, that's the Bitcoin CME futures. So don't pay attention to that one. Overall, we're a little more bullish this morning, but the question is, what will we be doing down the road? So let's go ahead and jump in here. We're going to be talking about Bitcoin. I'm going to look at the Ethereum and Cardano charts, might even take some glances at some others, but I want to kind of start painting a picture right now of what we're seeing happen on the charts, and I'm going to go ahead and spoil this for you guys. It's bearish. We're not seeing the things that you really would want to see to bounce back up. Yes, we had some levels of support, but with this Silvergate news coming in, with what we're seeing coming out of the mouth of Jerome Powell, and yes, while there's that little sliver of hope from the Cleveland Fed, overall things are just trending more bearish. I wouldn't be surprised to see a little bit of a bounce happen first, but right now the first thing that we actually ended up doing, we came down to levels we've been talking about for a while. Actually, I'm gonna take my oscillators down. We came down late last night. We actually touched 21,539. Now, we talked about 21.5. I think that actually we could curtail down and actually officially touch that number. However, getting stupid close. Do not be surprised if we see a little bit of a short bounce happen before bigger and more drastic things happen. And that, I want to pull up our oscillators, kind of look at what we have going on here. We're kind of in the MACD, kind of fizzling out. RSI, yes, we're very low. We're out here on the 12-hour chart, but we're kind of canceling out. Where we were developing forms of bullish divergence, we're kind of canceling that out right now. Notice that technically speaking, if we get official closes and this green 12-hour candle right here does close green, we could make an argument for bullish RSI divergence. But what I'm not seeing pop up on the oscillator from Chart Prime, which again is a fantastic tool to choose where you want to take the good and bad divergences, it's not showing us having divergence at all, which means we're not having it on MACD, we're not having it on RSI, or we need it on multiple for it to be very confluent. Yes, we had a little bit of a reversal triangle here a couple of days ago, but of course that has kind of fizzled out. Right now, things are leaning a little more bearish, and let's go ahead and pull up here on the on the Bitcoin chart. let's kind of pull up some other things. Something that Piper and I were discussing yesterday over in Discord. So if you guys were in that meeting, you guys got to be privy to this. But right now we are working to go through the 12-hour dynamic reactor here. This is also the level right here, that 21.5. Technically it's 21.489, but this is a very strong level of support that Chart Prime is giving to us as a place to watch for a potential bounce. We didn't quite get there yet, but we are working on taking out that dynamic reactor. For now, it is support. So is there a chance that we're able to use the support and bounce back up? Absolutely. But the problem is, as you're getting to the bottom of this, you got to start asking the question, do we end up breaking through and heading to the downside? Also, we're looking here at the 12-hourly chart. Let's just take a look at some other things. Well, I do think potentially a relief bounce could come back up to this resistance level of the falling wedge. That would still be setting us a lower high in a downward trend. And you got to start asking the question, how far can we actually go down? Now, we've talked about this on the show for a while. Let me turn this off just so I don't even distract you guys with any information. We have discussed, both Army Piper and myself, that Bitcoin realistically could be hitting numbers in the 18.4, 18.5 region all the way down towards 18,000. Well, let's go back. Let's pull up our Chart Prime. The first thing that you should know about Chart Prime, and this is one of the indicators that Piper loves to use, and it's these golden bands of the predictive ranges. And more often than not, yes, it goes out of there sometimes, but it likes to trade between. Just look at how this has acted all the way since back in June of 2022. Do we have some wicks and some action below? Absolutely, but the majority has happened within these bands. We have bounced once again with a strong rejection. Actually, if I pull this up, we have some reversal things up there as well, telling us that was a reversal. We hit our premium. A good target to look for it would be this little golden band, the bottom golden band at 18,600. But that's not the only thing telling us that that level is significant. Let's pull up a couple of other things. Let's pull up our market oracle down a little bit below it at 18,000. This right here, you can see that these lines are numbered. These blue lines are going to be lines on the 12-hourly chart of great places of support and resistance. And yes, we have the number 4 and the number 5 between us, but the strongest level of support is sitting all the way down at 18,000. Let's go a little deeper. Another really cool tool about Chart Prime is you can also pull up some other levels that are significant. I want to pull up some 4-hour levels and daily chart levels, and let's see if we get any confluence of those places. These come up just saying, there we go. All right, so this orange band right here, that should be, if I was looking at this correctly, my orange band corresponds to my 4-hour chart. Even the 4-hour chart is telling us this zone right here coming in close to, we also have this is the daily chart, also telling us this zone, 18.7 down all the way to 1800, maybe even lower towards 18.4. These are all signs of confluence with very, very strong numbers. Look at that, 1, 1, 3, 2. These are strong levels telling us, hey, keep an eye on this very, very heavily. Let's take a look at some other support lines that we're showing here on Chart Prime to kind of even find some confluence at that level. Before we go back, I'm going to show you one of the strongest ones. It's not even Chart Prime. Let's go into our smart money concepts and let's pull up some of our fixed volume, the fair value gaps and order blocks that we have coming in here on Chart Prime. These are other very strong indicators, just letting us know, hey, they got a lot of stuff here below us. Let it load here for a second. Look at all of this fair value gaps that we have on the way down towards this number 1. And then all the way down at 17,400, we have a very strong order block. Do we have some resistance and heavy things above us? Absolutely. And if the bulls want to mount some sort of a rally, if we end up getting low interest rate hikes, if we end up getting a very big flip in the narrative of the space, yes, absolutely. We still have a lot happening and popping up here above 25.2. But my eyes, based off of this trend, it looks like we are in support breaking mode and coming down to fill some of these gaps, not the other way around. We're not breaking resistances right now. We're setting and breaking new support lines. Now, let's go back over and let's just take a look at some traditional TA, because again, I told you, this is not just one or two things. We've been talking about this call 18,000. There's a lot of different indicators pulling us down to this level. And this is one, I had a great conversation with both Piper and Elianachi last night. And I'm not going to go into full depth of what we talked about, but I'm going to give you a little bit of teaser because we're going to be talking more about this tomorrow over in our Investing Bros Discord. in the free version. So even if you guys don't pay for our Patreon and join the group, if you just join our Discord, you're going to have an amazing webinar tomorrow with Elliot Nachi. He's an Elliott Waves and Fibonacci expert. But take a look at what we're looking at right now. Our golden pocket to 0.786, this range, he's talking about in Elliott Waves. And I'm not going to get involved with Elliott Waves because I probably would end up butchering it. But he talks about the significance of when you see this explosive of a rally in a wave 3, look for some harsh dips. Our golden pocket is sitting all the way down here at about 19,000 to about 19.2. That, of course, would take us past the 19.5 level that is our CME gap. And then you have the 0.786 or the 78.6% all the way down at 17.5. He said it is very common to come down into the middle of these zones, and look at that right there, 18,368, 18.4, corresponding to former resistance back here in December. Guys, we are just seeing an overload of confluence calling for Bitcoin to come down to these levels. Now, let's pause right there because that is Bitcoin. I know this is very bearish news, but this is actually a golden opportunity for you guys to look out for some more levels to acquire more Bitcoin. Let's kind of take this same type of reasoning because everything kind of feels the same. Let's move over into Ethereum and take a look at what Ethereum is doing. Now, this is another thing we've been talking about. Ethereum, worst case scenario, we're looking between 13 to 48. Let's just start right now by pulling up these Fibonacci levels. Same thing. Let's go back all the way to November. Let's go to the more recent peak that we've had. Guess what? Golden pocket sitting all the way down here at $1,300. If it gets really bad again, 0.786 down to 12.18. More realistic, somewhere in this region around 12.64. Let's pull up our smart money concepts. Let's pull up our market oracles. And guess what? We're going to have a lot of confirmation. Order block sitting right here at 12.60, kind of corresponding to what we were talking about there. Let me take that down and just kind of eliminate things as we get through them. We have fair value gaps right here, all the way down to those levels. Let's take that down. Let's keep looking at some other things as well. Let that take just a second, pop on down. We have another strong level of support here at 12.93, sitting right below our golden pocket. More confluence. I will say the strongest on the 12-hour chart is actually predicting potentially that Ethereum could have a little bit of pop-up. That doesn't mean it absolutely has to, but that is something that is different on the Ethereum chart than what we're seeing on Bitcoin. So that could be a little bit of a sign of some hope. Maybe we see a little bit of a rally back towards that. But just like Bitcoin, we are also still sitting here wrestling with our dynamic reactor. As a whole, again, you guys need to continue to watch the charts, make these decisions for yourself. But what we're seeing right now on a more macro timescale is this run was explosive. It was a very, very fun and a great time to be taking profit up here. But the bear market still has room to go down, especially with some of this news that is coming out that is just crushing the market. And I made a short about this yesterday. Go off my chart real quickly, Piper. I made a short about this last night. Some of you might have seen it, but I kind of went into detail on how I've seen some influencers, I've seen some people on Twitter get really, really rocked by the emotions of the market. And I want to kind of just pause you guys and remember what we were looking at just 3 weeks ago. 3 weeks ago, we were looking at Bitcoin and saying, man, we're hitting our heads on 25.2, but when are we going to break through it and start heading up to 28,000, 30,000? That was literally 3 weeks ago. Fast forward and we get the Silvergate crashes and we get Jerome Powell being hawkish. It brings us back down. And now the thing is like, all right, so the mood is more negative. But then we get that one article that comes out about the Cleveland Fed. And you see a lot of people kind of cling to that hope. Oh, look, it's going to fix everything. What's my point by bringing all this up? My point is you cannot just take emotional stories, emotional circumstances, and act like those are going to actually move the market. In fact, I can tell you right now, there are lots of experienced traders out there who do not actually have one care in the world about which way the market goes, but they love to prey on retail investors who cling to emotional hope stories one way or another. Whether you're a perma bull and you think that we're just going to keep going up, whether you're a perma bear and you think we're going to keep going down, you got to learn to tune all of that out and focus on what is the here, what is the now. This is one of the reasons why TA is so important. I don't think that TA is the end all be all. I'm a very big proponent of like, hey, let's keep studying the news. Let's keep looking at macroeconomics. But the charts are not emotional whatsoever. And you got to learn to just plug into them, look at what is happening in them, and go by what is here and now. Don't cling to hope stories. Don't cling to FOMO. Don't cling to FUD. Just look at the charts, make your decisions, look at what the confluence is calling for, and act accordingly. As we keep moving on, I want to show one more because I told you guys we got some big dips I think are coming for Ethereum and Bitcoin. Actually, go back to my chart here, Piper. Let's go ahead and just even show if what I'm saying is correct, and we end up coming down. Let's say Bitcoin ends up coming down, touching. Let's go 18.4. I'll go on the higher end of what I think that zone could be. I think it could drop all the way down towards 17.5. Back down towards this 78.6 level. But let's go on the more bullish side. Let's say we only come down just a little bit below the golden pocket. This would still bring a dip in Bitcoin. We're talking about levels of 13, maybe as far as even like 15% dips in Bitcoin. All right, so keep that in mind. Great opportunity to gobble up some more. Let's go over to Ethereum. Same thing with Ethereum. Let's take a look here. Let's go best case scenario, looking at worst case scenario. Right now, Ethereum, if we drop down to our golden pocket, we're looking at 15%. More realistically, down here towards 1280 or so, we're looking at 16%. Very, very similar things that we're looking for. And again, these violent, didn't mean to have that. These violent waves that we have up, more often than not, you're going to see them have a little bit more of a harsher dip back down towards that golden pocket, if not towards the 78.6. Here's where I want to bring in Cardano. And I know a lot of you guys, some of you guys do not like Cardano, and that's completely fine. Anyone can choose whatever coin they want. But I'm just looking at the charts. I'm looking at what's happening here, taking all the emotions out of it. And I think Cardano, while I do think a dip could be coming in as well. I don't know if Cardano's fall is over, although it did hit my first level support that I've been calling for here at 31.47, that nice purple line. I'm going to talk about this other line here in just a second. But let's take the same thing. We had the same really nice explosive rally on Cardano that we had with Ethereum and Bitcoin. But notice that while Bitcoin and Ethereum have been more trading sideways downwards, Cardano has just gone ahead and dropped. After hitting these peaks, it hasn't really wasted time. It has just been gradually dropping all the way down. It got as high as 42 cents. Now we're down towards 31 cents. What's my point here? Let's take that Fibonacci. Let's go to the more recent bottom. Let's go to this top. Guess where it currently is sitting? It is currently right above the golden pocket, which means in these kinds of ways, again, you're looking for a retracement back to golden pocket is a good situation. More realistically, somewhere in the middle between golden pocket and 78.6. Cardano would only need to fall. Okay, golden pocket, 5%. Even down here in the middle here, back towards these levels, 8-9%. That is not as big of a fall as we have with Bitcoin and Ethereum. Now, we're also going to read an article here a little bit later in the news. There are some bullish predictions that some of the community is making. Cardano also is a traditional. Cardano likes to break the rules. They don't always follow all the rules when it comes to crypto for the technical analysis. But my point here is that I actually think that when we're looking at some of what we would consider these big three, Bitcoin, Ethereum, Cardano, I actually think that if you're looking at which one's gonna be the best hold here for a little bit, the charts are showing Cardano probably has the least downside at this moment down to lower levels. But I want to kind of let you guys explore that. There's something happening really big right here that could be very bearish. Right now, it is holding up as support, this blue line. I'm gonna zoom out and let you guys see it completely. But this blue line is holding up as support. This support line kind of also falls right in line with the support of a falling wedge. That should break bullish, and maybe Cardano does. We're kind of retesting at the moment. If I were to go on the 4-hourly chart, we're kind of going back towards retesting that resistance level. So this will be key. But here's what I want to kind of point out about this blue line. This blue line has significance going back for a while. Let's go out to the daily chart and let's zoom out. This blue level has been significant all the way since back here, support of March of 2022. So support right here, but then if we kind of scroll over, it acted as major resistance. We have 1-2 touches right here back in June, again in August. We kind of flirted with it, broke through. But my point here is this is a nice level that has, since we gotten above it, has been nice and bullish. We're flirting with it right now. Does it stay support, and does Cardano kind of cling to that and not fall dramatically, or do we end up losing this and having a major bearish scenario going? All the TA that I'm doing this morning, by the way, I'm not saying that we won't see new lows for Bitcoin, Ethereum, Cardano, other cryptos as well. But at the moment, as much as bearish as I've been with this TA, I think that what we're going to see is significant bounces. Like when we're looking at Bitcoin, I think we're going to see a bounce here. Like I think we'll bottom out here around 18.5 or so, and then we start to push back up towards 25.2. When I'm looking at what we have over the rest of this quarter and early quarter two, yes, we have some hawkish pressure from Silvergate, and yes, we have some hawkish pressure from the Fed. But guess what? When we got the FTX news, we just absolutely plummeted from 21.5 down here to 15.5 in a matter of 2 days, very, very quickly. We have a lot of bearish pressure that has hit us since 25.2, and yet we are not falling that quickly. In fact, I would actually say this is a sign of strength from the bulls that we are not just dropping out. We got Silvergate dropping. It looks like recession is coming and inflation isn't under control, and yet we're not just plummeting. We should be plummeting. We should count our blessings and realize 18.5, as hard as that fall that would still be a very bullish move. And then again, I think by that time, when you do get the 50 basis point from Jerome Powell here in March, which is looking like a more realistic prediction, you can't hurt me any more than that. And it's time for the regrouping. This is time. We kind of talked about this. The whales, the manipulators of the space, they buy in down here. They pump the market. They take their profits up here. And they're going to try to discourage you as a retail investor as much as you can. And I guarantee you, when we come down here towards 19,000, when we lose 20,000, there's going to be like this punch of your stomach kind of feeling to the retail investor, like, ugh, we were just talking about getting back to 30, and now we're back below 20. And your feelings are not going to want to buy whatsoever. You're going to be thinking, let me just go ahead and wait for this new bottom. Let me wait for that 10,000. Let me wait for that 3,000. And then watch there be a nice little bounce where whales and smart traders realize, man, 18.5, 18,000, let me gobble up some more Bitcoin. And it sends us back up. This is all part of their plan to just mess with your emotions, mess with your state, trick you out of your money so they can get as much of it as possible. But what you need to do is learn how to think just like them so that you can play the game with them as well. Bitcoin doesn't care about your feelings. You got to learn to just trade the charts. And right now, the charts are calling for some strong support down this area. We just got to get some pain first. I know that was a lot I threw at you. And that was probably different TA than I usually do. But hopefully it was very helpful. Piper, as we try to transition here now, it's 9:30. What were your thoughts overall? Are you seeing anything different? Are you in agreement? What are your thoughts about that, TA?
I do have a quick thing to show, a little bit of hopium. I'm gonna throw a little bit of hopium for Bitcoin here. I'm looking at a 2-hour chart right now on Bitcoin, and so this would be short term, which would still fall in line with your downside wedge. Excuse me. But if you look right here on the oscillator, we did get bullish divergences that printed here, and we got a bounce right on the bullish zone line of the oscillator. But check this out. We got the reversal up. Last time we had this reversal was back here. And I mean, we did get a little movement up of about 2.5%. So, not horrible in the world of it's better. 2% up is better than 2% down, in my opinion, right? But check this out. This is what I want to show you. If I throw on the chart pattern, we're in a falling wedge right now, and we're getting the reversal up. So we got that. We've got the bullish Harami candle that printed there, which we also had here. And we also got that bullish divergence that printed there. And it looks like the oscillator is really tight, which means we typically get a movement when it starts getting constricted like this on the cloud. This could be a pull-up point for us right now to come back up and either test the midline of the predictive ranges here, or to test the top there before we come down. And maybe that's when we come into this trade band here on the 2 hours. So there could be a little move upside today. So little dash of hopium into this recipe of disaster that we're having with Bitcoin right now. But I just wanted to point that out. There are a little bit of things that tell me we could have a little upside today. So
yeah, and I think I started off by saying I think there's a decent chance we are going to find support. Like he said, on smaller timelines. Go back to my screen. This is the 4-hour chart. I'll just look at oscillators right now, and you can look at this. Oscillators, again, with Chart Prime, if you just bought of the oscillators, you'd get your money's worth. But we are getting oversold. We are getting some small bullish divergence. I think you were looking at the 2-hour chart. Great calls. I think that there's a chance that we actually get a little bit of a bounce. Remember, we talked about this 21.5 level being a significant level of support. You're going to bounce on support. I was more taking a look at macro, and let's take a look at that real quick, and then we'll transition to stories here in just a second. But let's look at what we have experienced. Back here, the bottom of the Bitcoin market so far, back in November, got us down to 15.5. We actually ended up double bottoming down here. I'll even start at the double bottom. Realistically, this rally started back here when you're looking at the charts. We had a nice little rally. We popped back up right here. We popped up a good, 17%? But guess what? Then we just turned around and we dropped once again. Then this rally starts, and this is rallying. We're setting higher lows, higher highs. Look at this. We've rallied up here from the double bottom. We rallied up 18, 19%, and then we came back down. Come on, grab my tool here. We came back down 11%. Does that mean the rally's over? No, it doesn't mean the rally's over. It just means it was time to reject. Same thing. Then we take this really explosive rally. So let's go from this one right here. We rally all the way up 32% and then take just a little, come on now, grab. We fall 5%. Then we rally again, and I'm going to get rid of this other big one. Then we rally again. We make a nice push, and all the bumps in here, but let's go to the biggest one. We rally 19%. Great rally, right? This is still setting higher highs, higher lows. Guess what? During the rally, we go and we take an 11% dip, and then we rally up again. My point here is from a macro perspective, we're not going to see, like if this is our level, let's say we are going down to 18.4. So I'm going to put a flat line right here. It's not going to look like this. That's not how charts move. It's going to look like this. Something weird. We might even have some times where we trade sideways. There's going to be lots of bounces on smaller time frames saying, oh, we have support, we have support, we have support. We might even see some small support happen out on the 12-hour and the daily chart. The point is, from a macro perspective, just because you start to move the opposite way does not mean the trend is over. And I don't know how many people need to hear this, but I'll just give a short reminder. Remember, trends don't mean you don't have retractions and bounces in them. Trend just means overall you're moving to the upside. This was a whole bull trend. What we're working on right now, what we are canceling and killing, gosh, still have my marker on, is we are killing this upward trend, starting a new bearish one. I would call this a secondary bull trend. We are working right as we speak to cancel out and turn it into a secondary bear trend. But we definitely have a tertiary, third tertiary bear trend happening where we are setting lower highs, lower lows. But in this, look at this trend right here. We set after coming to this first bottom, we rallied another 6.5% during a bear trend. So just because we're having support right here, I think it's good. Day traders will use this kind of volatility. They'll trade based off it. They'll still enter some shorter longs, but they'll enter longer shorts. But watch on the more macro timeline. I'm talking about the rest of March into April as we make our way down towards these lower levels. It's going to be something to keep your eyes on. And it's just what the market is telling us right now. To take out the bullish narrative, take out the bearish narrative, take out the biases. The charts are showing we're a little overextended on a more macro timeline. It's time to pull back. But when we're talking about big trend, once again, last thing, show my chart one more time. Let's say we come back down here, and I'm going to draw a straight line just for the sake of the argument. Let's say we come down here and then we bounce, and we're talking about going back up towards 25.2. Maybe we finally make our break up to 28, right? And we kind of reject. Well, what do we have here? We have an uptrend. We have higher lows, higher highs. This is still a longer-term bullish trend, but guess what? Bull trends, just like what we had back here during the bull market of 2020 and 2021, they have places where you pull back 30% plus. Even this from here to here, this is all still bull market. Guess what? People freaked out here. We had a 50% retracement in a bull market. That's pretty rare. Those are pretty crazy, but it happens. So in the same boat, just because we're calling for an $18,000 price doesn't make us bearish. It doesn't make us bullish either. It makes us people who just look at the chart and say, you know what? We had a little secondary bull trend. It's time for a secondary bear trend. And hopefully we start to see the pattern develop where we're setting a main trend back to the bullish direction. We're just going to have some little retracements along the way. That being said, you can go ahead. Yeah, go off my screen. That is the TA we have for you guys today. Make sure you guys put in chat what your thoughts are. I'm going to read chat just for a second, and we're going to kind of jump into some stories here. Did you see anything interesting? I saw you scroll for me there, buddy. Money Mike said, yo, I'm so happy to see you guys do your own thing. I know you're going to have a great channel. Thank you so much, man. Did I say, yeah, Money Mikey. Thank you, man. I'm very excited. This channel is growing so fast. You guys have been so awesome, so supportive. It is an amazing journey. Anything you saw in the chat, Piper, that we should address, or should we keep moving on?
No, but I did see over in Chart Prime's Discord that Crypto Set Guy is our newest premium member. So congrats to him for joining us over there with the best trader community around. So
yes, absolutely.
Yeah, I just wanted to touch on that because there were people asking about some lower time frames on Bitcoin, and if they're traders that were asking that, I didn't want them to go, oh, it's going down. That there is going to be a little pull ups there too. So I didn't want someone to get into a short on the macro explanation, but ended up missing a better opportunity to get in. So that's why I wanted to touch on that little hopium. Macro, absolutely, I think we got further downside to go, but there could be a little bounce today. So got to take care of my fellow traders, you know.
Absolutely.
Let's get into some articles.
Let's do it. We got about 20 minutes left. So here we're gonna kind of touch on some quick ones, and then we'll kind of move over into our biggest stories of the day. The first one, ADA. I told you guys I was reading an article about Cardano. Cardano's DeFi total value locked hits a new all-time high. I got my nice highlighter tool, so now I don't have to kind of look for all my places. We're going to read a couple different lines here that I thought were significant, but the total value locked on Cardano's decentralized finance or DeFi ecosystem has recently hit a new all-time high of 336.8 million ADA tokens, worth over 110 million at the time of writing. So, got to pause right there. Bullish for Cardano. That's awesome. Sitting at an all-time high. Do need to put it in a little bit of perspective. The largest decentralized finance protocol on Cardano's network is currently Miniswap, with a total value of 40 million, representing 36% of the total. The protocol is followed by Wing Riders, Indigo, and DJED stablecoin, which went live at the end of January. Comparing this to others, though, in terms of value locked, Cardano lags significantly behind BNB Chain, which has a TVL worth 4.7 billion. All right, so yeah, this is big. 336 million, that's awesome, but we have a little bit of ways to go, even just to catch up to BNB. Ethereum is the protocol to compete with, but first Cardano needs to outpace other Ethereum killers and double down on its efforts to grow its DeFi economy across the board. Now, I kind of hinted at this. This is where it kind of moves into some other things here, other predictions. First of all, I did think this part was interesting because I did not know this. Data showing right now 80% of Cardano investors are in the red, 4% are at the money, and then 16% are in money or sitting on unrealized gains. That's really important, and I think that that's a very bullish sign for Cardano, that 80% of its holders are in the red, and yet they're continuing to hold on strong despite all of the negativity in the market right now. Just another piece of evidence showing you how strong the Cardano community is. Moving down here to some predictions being made. The cryptocurrency community expects Cardano to experience an uptrend, an upward movement during the month of March at a time in which cryptocurrency's adoption keeps on growing. I kind of mentioned that. I kind of said I think that what we're going to see, I still think there's a little bit more downside to go, but I do think that you're going to see Cardano probably outpace or at least not sustain the same significant dips that Ethereum and Bitcoin might sustain. According to over 1,000 users on CoinMarketCap's cryptocurrency price estimates, on average, respondents predicted that ADA would end the month of March trading at 39.71 cents per token, up from about 33.77 so that's where it's currently trading for. So when they wrote this article, we were a little bit higher than this. I'm gonna have to wait to see if I believe this one. They're making a prediction for 39 cents. Who knows? Who remembers here just a little bit ago? We also had a prediction they would end February at 49 cents. Did not get there, and I kind of called that one when I saw that prediction. I said I think it's a little high for Cardano. I think they can rally, but I think it's a little high. In the same breath, I'm gonna go ahead and say the same thing about this prediction. I am in agreement that I think that Cardano can have a better March than the likes of Bitcoin and Ethereum. I'm not going to say 39 is impossible, but I don't know if I agree. I think March is going to be a rough month for the crypto sector. I even think bleeding into April might be rough. I think it would be very bullish if somehow Cardano was able to make it back towards 33, 35 cents. But for me, 39 is a little high. Let me know in the comments what you guys think about that 39-cent prediction. Let's keep moving on here with some interesting things. U.S. government transfers over $200 million in Bitcoin to Coinbase, blockchain data shows. Very interesting article. And I know the immediate response here is going to be, is Cardano bad? Or sorry, is Coinbase bad? Is Coinbase evil? I think it's a little too early to say that. Let's read some of the details. It is something to keep an eye on, what Coinbase's relationship looks like. Of course, a lot of us have that bad taste in our mouth with what we just saw with FTX and the collusion that it looks like was there with centralized entities. I don't think I'm ready to put Coinbase and Brian Armstrong in that same boat, but it's one of those things that warrants the eyeball test. It warrants, I'm keeping my eyes on you, Brian. What are you doing with your exchange? According to cryptocurrency analysts from PeckShield, 49,000 Bitcoin worth $1 billion from wallets related to seizures of the now defunct darknet marketplace Silk Road have started moving. The government sent 98,000 Bitcoin worth $217 million to Coinbase, while an additional 39,000 Bitcoin worth $867 million was transferred to new addresses, to two new addresses that appear to be internally controlled and not linked to any exchanges. This was his tweet he put out. He kind of gives you a nice little graphic of that movement, but there are some more interesting things down here. U.S. government, in case you guys didn't know what this was, the U.S. government seized 51,000 Bitcoin connected to the Silk Road after it took down the website. This recent transfer of Bitcoin raises questions about the government's plans for the seized assets. It also highlights the ongoing interest of law enforcement agencies in cryptocurrency. I have been saying this for a very long time. It's going to show us what these law enforcement agencies actually think, because if they think they can seize the asset, whether it's US dollar or it's crypto or anything else, if they think they can add that to their fund, they're very incentivized to do a very good job prosecuting and going after that case. It's the ones where they cannot get the crypto that you kind of see them maybe take a back seat. So this is, I think, very important part of the article. Going on, though, it also talked about many assume that the top crypto asset enabled fully anonymous transfers that could evade law enforcement, but this was not the case. However, Bitcoin's blockchain allows for transactions to be traced between addresses. Boom, right there. I know I'm preaching the choir again, but this is why Bitcoin and cryptocurrency are so good. And I hate the argument when people say, oh, crypto is the best use case for criminal activity. No, it is not. Blockchains that you can read where money is going and exchanging is actually going to be one of the best friends of law enforcement, almost to a fault, especially as we're seeing the uptick in CBDCs. Watch governments use CBDCs and cryptocurrency blockchain technology to be able to actually crack down on illegal activity so much easier. But what's really cool about it, and this is what they do not like, and Piper, I want to get your take on this, is not only that, but as we're seeing in this tweet, now we are able to we're able to see what the government is doing with money. This is government money they seized, and we're watching them. We know they move stuff into Coinbase. We know they move stuff into other wallets. That part of this the government does not like, and that is that we can kind of, in some form of way, keep them accountable. Piper, what are your thoughts about this article and this story in general?
I just want to point out, so people may not know, but one of the jobs that I've done for many years of my Army career was threat finance and counter drug. We have yet, and even currently, like right now, the unit that I am retiring out of works with DEA for the border for cartels, right? So I'm literally like fresh out of threat finance. We've never ever captured any of our transactions that we're monitoring on blockchain. It's all been bags of US dollars. So the argument is irrelevant. Like, trust me, the most nefarious acts on this planet are taking place through dollars, US dollars in physical form or gold. There have been some terrorist activities that we've captured in the Middle East where it was being funded through blockchain. But guess what? Those are the ones we caught. Most of the things that we don't catch in the act is US dollar based, not crypto based. It's an argument that holds no water when you have someone who's literally worked in it for years. So,
I mean, absolutely. But again, we're dealing with a lot of people who don't understand the technology, trying to make observations about it. It's just part of what you got. I'm gonna kind of go through the headlines in the next two stories because I really want, with the last little bit of the show, I want to get into the real meat and potatoes, and that is a lot of stuff going on in Washington over the last couple of days. But this first headline, again, I just wanted to mention it. Mt. Gox Bitcoin Whale Fund plans to hodl after choosing September payout. In a nutshell, I'm going to put this article in our Discord today, but in a nutshell, pretty much the largest holder that's going to get the most Bitcoin from the Mt. Gox ordeal has already claimed they're not going to be liquidating. They're going to continue to hodl on. That's been a major FUD story. What happens at Mt. Gox? We'll see what happens, but I'm expecting it to be a nothing burger story. I don't think it's going to be bearish. I think that's just a lot of FUD that's being pumped into the market. We already mentioned it today, and there's been a lot of coverage on it in other places. So, again, I'm just going to mention this, but Silvergate will liquidate the bank and wind down operations. There's a couple different quotes I had in here, but again, for the sake of time, I do want to move on. I did notice Senator Elizabeth Warren made her way in here, saying that she was not surprised by the Silvergate's liquidation. I warned of Silvergate's risky, if not illegal activity, and identified severe due diligence failures. to be fair, Elizabeth Warren has warned us about everything in the crypto space. So she's bound to be right. You know, the saying goes, a broken clock is right twice a day. If you warn that everything in the world is bad and then bad things happen, yes, you get to say that you were skeptical of it the whole time.
I want
Let me know what you
Elizabeth
guys think
Warren.
about that.
I want Elizabeth Warren's insight, and I want the trading accuracy of Nancy Pelosi. If I can get those two things, I'm set for life.
Yeah, there's some other interesting things. What was this? I mean, obviously the questions at this point is going to be, and I won't go into detail again. I'll put this article over there. The question is going to be, what does the future of cryptocurrency and the traditional banking system looks like? It's of course with Silvergate, it's casting a lot of shadows on that. Don't get me wrong, though. A lot of banks are still going to jump in on this, but it's the FUD story of the day. Not only is the bank closing down, but is there going to be no crypto and banking, traditional banking system whatsoever? Is this finally the death of the cryptocurrency industry? That's what they're going to want to try to push to people who are not invested in this daily, day in and day out. But you guys know better than that. Let's take a move over into Washington, though. And before I get into the Biden story, because I'm sure a lot of you guys have heard about that, let's start off with some regulational stories that are actually decent. They're actually pretty helpful. CFTC Chair Rostin Benham. Is that how his name's pronounced? I'm not really sure. He deems Ethereum and stablecoins to be commodities. This will be huge. During a hearing before the Senate Agriculture Committee, Benham said, I have made the argument that Ethereum is a commodity. It's been listed on CFTC exchanges for quite some time. Benham also commented on stablecoins, stating, I agree that stablecoins are and should be regulated financial instruments. Notwithstanding a regulatory framework around stablecoins, they're going to be commodities in my view. What's nice about this, again, he didn't necessarily come out and agree that Ethereum and stablecoins should be there, but they also mentioned in this article that Gensler has also suggested that the CFTC should take on a greater regulatory role, meaning that Benham's comments are not incompatible with Gensler's. And of course, Gary Gensler and the SEC have just been handed a whole bag of L's this week. We've talked about that in previous shows. We're probably going to talk about that more in future shows, but hopefully we are seeing, as all of this crazy stuff comes out, we're finally seeing common sense come into practice. The SEC is not going to get everything they want, and this would be a major win for Ethereum and precedents for other legitimate cryptocurrencies that they should not fall under the preview of the SEC, but in fact the CFTC. We move on to another story in a similar world. Crypto bill draft will be released in April, says Senator Gillibrand. I think that's how it's pronounced. The Loomis-Gillibrand bill is expected to offer regulatory clarity for many crypto projects and determine whether they fall under the purview of the SEC or the CFTC. Now, this is very bullish. I love this. I know some people would rather there be no regulation at all of the crypto space. But after everything that just happened with FTX, after everything that's happened with scam coins, it's just the writing is on the wall. For cryptocurrency to thrive and to move forward in this world, in the United States, regulation is going to be needed. It's just that we want good regulation, common sense regulation, non-invasive regulation. Let's look at some things here. This is a quote, I believe, by Gillibrand saying, our ambition is to make sure that there is a place to start a national conversation about a holistic approach to digital assets, to make sure that digital assets have the character of security, are regulated by the SEC, to have the assets that have the unintangibles of commodities are regulated by the CFTC, to make sure stablecoins can be overseen by the OCC, to make sure that there are tax provisions for the entire industry. Ultimately, what they're kind of talking about, this bill will finally give us the answer to the question that nobody has seen to answer. What classifies a security? What classifies a commodity? Can we finally put the rules in place so that cryptocurrency teams can actually build their coins and their tokens in a way that makes sense and know what they're going to end up falling into? This bill could be huge. We got still a lot of upward battle here when it comes to regulation. There are still a lot of bad players in the space, just like Senator Warren, who would love to just go ahead and kill cryptocurrency altogether. But it's nice to see people like Loomis and Gillibrand still fighting for us to get some common sense regulation in the space. Now, let's move on into the biggest story of the day, and that is what is coming out of the White House from President Biden and his team. There's an article over here on Cointelegraph. Biden wants to double capital gains and clamp down on crypto wash sales, says these reports. Now, I will clarify. We're going to talk about this in this report. they're going to try to make an argument that this is only to go after wealthy people. Like one of the things in this bill, we're going to talk most about crypto, but they're even talking about raising taxes of people making $400,000 or more from, I believe it's 37% to 39%. His logical thought is like, oh, I don't want to raise taxes on the middle class and lower. We want to raise taxes on the top 1%. Don't even need to give you guys a history lesson on when you do things like that. It just encourages the 1% and the business owners and the higher ups to just move their business practices and their stuff out of the country, which means instead of increasing what money is coming in taxes, we actually decrease it because people find legal loopholes to get away from the United States. But let's just talk about crypto for now, and let's move on to what this would mean. This is a proposed doubling of capital gains for certain investors. I told you, certain investors. The Biden administration is set to release its fiscal 2024 budget plan on March 9th, which is reportedly aimed at reducing the deficit by $3 trillion over the next decade. It also includes changes to the crypto tax treatment with the aim of raising $24 billion. One of these proposals includes an end to the strategy in which a crypto trader sells assets at a loss for tax purposes, known as tax loss harvesting. So that's the first big hammer to the crypto space, is that has been a nice little outlet for crypto traders who have experienced the pains of buying at 69,000 and riding Bitcoin all the way down. They were able to take advantage of some really cool things that help them invest properly and stay invested in the market. Biden wants to get rid of that. But even bigger, okay, so let's keep going on here. Such a strategy is not permitted when stocks and bonds are involved under current wash sale rules. However, crypto is currently not under these same rules, as a digital asset has not been classified as security. So again, very big deal right here. Not saying that this bill is going to go through, but if Biden does get this bill to pass, potentially could we make an argument? Could there be a case that only the ones that are classified as securities are susceptible to this rule? We'll have to kind of see how that one plays out. Danny Talware from crypto tax software firm Coinly commented, "This is an inevitable consideration for the U.S., which, if implemented, will see it on par with other jurisdictions such as Canada and Australia, where crypto wash sales apply." Now let's pause right there. If you are watching right now from Canada or Australia, I mean you, no disrespect, but I think you'll agree with me. We do not want the United States to try to mimic and model Canada and Australia. That is an absolutely horrendous idea. And if that's the argument for, count me as against. And I really hope the rest of the people that get to vote on this have a similar opinion. We do not want to mimic what we are seeing in Canada and Australia. This makes sense for the Biden administration, but I just thought I wanted to make that very, very clear. Let's keep moving on here to more of what this bill actually gets into, and then we'll break it down. The Biden budget also proposes to nearly double the capital gains tax rate for investors making at least $1 million to pay 39.6% on long-term investments, up from the current 20% tax rate. It also plans to raise income levies on corporations and wealthy Americans, according to Bloomberg. So let's go ahead and break this down, Piper. You can go off my screen. What are your thoughts about what the Biden administration is proposing here? Obviously, it's going to be negative, but give us some deeper insights as to why this is such a terrible idea.
So when you look at, I actually thought that this was probably going to be the last year for tax harvesting in crypto. I thought that for a while. I don't know why. It has to, it's all waiting on this SEC decision and actual policy and regulation, which they have failed to do. They would rather go after them afterwards and go, oh, by the way, you did this wrong, instead of telling them this is how you do it right, you know? But I do believe that this is just another money grab for the government. I mean, anything that they can do to grab money, they're going to, because they have these delusional dreams of grandeur where they want everything green, and they want regulation on all these different, you know, environmental things, and they want all these programs. That all takes money. And, you know, every year they argue about raising the debt ceiling when we know they're going to do that. I'm not shocked to see that they're going to, you know, try to find another way to grab the money. The one thing that bothered me, and I don't know where I read it at, but they were talking about that actually being taxed on the unrealized gains. And that's where it becomes problematic everywhere, because that would be for stocks and crypto. You imagine like right now, say, you know, Sailor, he's out there with all of his Bitcoin, taking loans against his Bitcoin so that he can spend that money instead of selling his Bitcoin. And now, on top of his interest rate for his loan, he now has to pay taxes on the Bitcoin that he hasn't even touched ever, and it's never moved. I don't think that's right. At some point,
Yeah.
if I pay a bunch of money right now for my unrealized gains, capital gains, and it drops next year, do I get that money back? I mean, that's the problem I see with it all. So
Yeah, and the thing that I'm looking at right here, and they're going to try to say they're not going after all of us because I mean, some of us we're not going to pull out $1 million, so it wouldn't affect us. But wouldn't the goal be all of us? Everyone watching this right now, whether you pull out profits of $1 million now or not, wouldn't that be the goal in the future? Isn't that the thought that here in a couple of years, that as we're buying all these low prices, that we're going to be able to pull out money and exceed $1 million? And that's the whole goal here. And it's just this concept of like, hey, as an American citizen, I'm going to talk about Americans. I don't know what they teach. I'm assuming they should teach this everywhere. But if you take a budget class, everyone would tell you, hey, are you struggling? Are you not having a lot of inflow? Or like, are you struggling to pay your bills? You need to learn how to budget. Obviously, getting a raise at work and making more money would be nice. But you need to start with, how can I maximize what I currently have, knowing that I'm not going to make more money? And so we as individuals are forced, when we have money problems, we have to learn how to spend less. We have to learn how to have self-control. We have to take care of our money with the assumption that for now, it is not an option to make more. The government doesn't have to go by those rules. The government solution is, oh, we don't have enough money. Let's just get more money. Let's print more money. Oh, wait, Jerome Powell and the Fed is saying we need to cut money to get inflation. Well, you know what? Let's just go after it. Let's take it from the citizens. And let's say we're just going to go after the wealthy ones. And I understand kind of the emotional thought there. Like, while I disagree with the policy of it, from an emotional standpoint, it makes sense to say, you know what, these individuals are very wealthy. They can afford to spend more money in taxes and really help out people. And it's a beautiful thought of a utopia. Guess what? Someday, in my personal belief as a Christian, when I go to heaven, there is going to be a utopia of thought. There is going to be it's everyone just does things for everybody. But guess what? While I'm down here on earth and I know I live amongst people that some are great people and I can trust, there's millions that I cannot trust. And there has to be common sense policy put in place. And common sense would say, if I'm a wealthy person making $400,000 or more, in reality, first of all, let's stop right there. 400,000, I would love to make it. I'm not making that much per year, but it's not that much money, especially if you're a business owner. If you're making $400,000 and you're running a small to medium-sized business, you're the one who's really going to get hit hard right here. And guess what happens when you're running a medium to small business and you employ, let's say, 20 to 50 people, somewhere in that range, and these taxes are levied upon you? Guess what you are forced to do as a business owner? Make cuts. You're definitely not giving out raises. You're more than likely going to actually cut your staff. And so while the White House thinks what they're doing is helping out the little guy by raising taxes on what they would call the more elite, the wealthy, they're actually just making it turn around. And it's the concept of biting the hand that feeds you. The reason why the American economy is so good is because of billionaires and people who make money and create jobs and do these things. That's why I know it doesn't make emotional sense, but it's common sense. Let's incentivize people to build wealth. Because when we incentivize it, yes, is there some corruption that happens? Is there some evil? Do people get selfish? Absolutely. But when you give them incentives to stay here in the United States, when you give them incentives to create jobs, you end up helping the little guy. But that would require the U.S. government to learn how to budget rather than just spend money at will, and when they run out, just go get some more. It's time that they start learning responsibility, and that's my opinion. It is 10:02. Piper, any closing thoughts from you before we wrap out today's show?
Yeah, I'm just going to wrap it up with I think the irony of Elizabeth Warren talking about the threat to employment numbers in the United States, immediately followed by Joe Biden doing something that could cause small businesses to cut jobs, is just typical government right there. So.
Yeah, absolutely. Well, guys, that is all we have for you in today's show. Again, make sure you guys vote. We don't know what the future of the show will look like, but your feedback is absolutely essential to help us grow. Remember, we only got a couple of weeks left on that Sharp Prime deal. If you're looking for a lifetime membership, make sure you act right now because that deal is going away and it is fantastic. Also, on your way out, make sure you smash that like button and subscribe to the channel. And last thing that I just found out this morning, I will be appearing today over on the BitLab Academy channel with my good friend Kelly Kellum. Make sure he goes live at 10:30. Go check him out. Go watch today. You will see me over there. With that said, everyone in our Discord community, I will see you guys later this afternoon for our AMA. Everybody else, I will see you tomorrow. You guys have a great day.